Hello, and thank you for tuning in to Wolf & Company's webinar series. Joining us today to discuss enabling innovation through digital transformation is Meredith Piatti. Meredith is a principal in Wolf & Company's advisory group and serves on the firm's internal audit team, where she provides internal audit, consulting, and risk management services to clients. Rich Fay is a principal in Wolf's Assurance Group and leads the firm's FinTech team. And moderating the group will be Drew Coveney. Drew is a senior manager in Wolf's advisory group and serves on the firm's internal audit team, where he's responsible for coordinating, supervising, and executing internal audit services for clients. During today's discussion, we'll be identifying some common roadblocks and how to overcome them, how to efficiently integrate new IT systems and collaborate with FinTechs, and learn how to establish a successful digital transformation project plan. Leading the discussion today is Drew, and I'll now be turning it over to him to get us started.
Thanks, Stephanie. So when I think about innovation, the first word that comes to mind is change. And the banking industry has certainly changed a lot over the last 10 years, and probably even more so over the last 2 years. I'll start the conversation off. Rich, this one's for you. What are some of the biggest disruptors that we've seen in the industry over the past 2 years?
Great question, Drew. And you somewhat answered it in your opening line there. Is we're having this huge shift to digital, this transformation to digital for all of our customers. So we have the younger generation that's grown up in a very digital time. They have access to phones at a young age. They enter transactions at a young age, and online. And then you have the older generation who was somewhat forced into this digital world, even though they didn't mind going to the branch, or they might have preferred going to the branch. But because of COVID over the last couple of years, they have not had that ability. Or when everything was shut down, they realized, oh, maybe I'll save myself the half-hour commute and I'll just do something through my phone. So one is just that giant shift to digital as a country as a whole. And then two is that you have tech companies that have sort of figured out a way to compete with financial institutions. And they were originally struggling to do that. So the bank's strength was always their ability to generate deposits. They had charters, they could obtain FDIC insurance, and tech companies weren't able to do this. But the new trend of banking as a service is becoming so popular. It's a way of tech companies to offer financial services to their clients without going through the process of getting that charter, of contracting with a core processor, like very expensive, time-consuming things. These tech companies are finding banking as a service partners and being able to unlock the key to all these banking tools.
Yeah, I'd have to agree with that, Rich. It's certainly a perfect storm right now where you've got people, whether they were or were not willing to embrace digital technology, having to do so in the last 2 years. And I think financial institutions in general have done a good job of unshackling some of their earlier problems with, being slow to change, maybe being afraid of regulatory scrutiny of embracing some of these digital items, and have pushed themselves to do that. But there's such a competitive landscape out there right now with these tech companies that are making moves into space. There's still the continued merger and acquisitions, just as companies, financial institutions really struggle to stay competitive with all their desires and needs. And really there's this push to growth. If you're not at the $1 billion mark, how are you going to get there? How are you going to get the resources that you need? And trying to make these strategic partnerships with either other financial institutions or other fintech companies. So there's a lot going on out there of different paths that lead to the opportunities that you want, but there's such a push that you have to do it, and you need to set yourself up for success if you're going to make these movements.
Awesome. So with this increased competition, you got larger banks, you got fintech companies moving into the space. How can innovation and how can these changes sort of help the banks remain competitive as they approach things? Rich, as you mentioned, banking as a service, impacts of cryptocurrency on the banking space, and also, last but not least, the metaverse. We start talking about these new worlds, these new technologies. How are banks able to remain competitive?
Yeah, I think it comes down to three basic things: is retaining your existing customers, expanding those relationships, and then attracting new customers. And a major part of doing that is going to be through your digital offerings. Um, are are you providing your customers with the tools that they need? I think a pretty fascinating story we heard not too long ago on another panel was the idea that not all of your customers want the same type of technology, right? So you may have that younger generation that's really concerned with saving for the future, or building that nest egg, or saving for retirement, where the product that they're looking for isn't necessarily the same product as your older customers. Your older customers may not be concerned with that. They may be more um, concerned with budgeting in retirement, right? They're not going to be as they're not going to want the same exact tools. And there are technology companies developing products for both of those demographics. So that's the type of service that you can better provide to your customers by investing in this. And that covers account opening, loan origination, and that improved digital banking products.
Mary, anything to add to what Rich had to say?
So I think Rich raised a lot of good points regarding, making sure you're able to retain your customers and offering people the experience they want based on what they have today. I read a really interesting article, I believe it was in Forbes recently, regarding the fact that, the items that Rich was discussing regarding account opening and loan origination, those are really table stakes at this point. That's where the industry was and where fintech companies were 5 years ago. I think in really getting the true benefits out of all these items, that financial institutions need to be more forward looking. They need to not only be adopting those items that are mainstream today, but really put together an infrastructure at their institutions that allows them to embrace some of the things that have made fintech companies successful today. Having either a partnership with one of those fintechs or having the talent inside to allow for this nimble, adaptable item, having a IT infrastructure and a data program that allows them to start thinking about the next level things. I think in your intro, you mentioned cryptocurrency, and that might be something that's a little bit on the cutting edge for financial institutions today, but it's going to be Main Street pretty soon. There's all these different things buzzing around there, artificial intelligence, and really it's not just about adopting the technologies that are here today, but making sure that you have a strategic roadmap and a plan for how you're going to continue to innovate and continually have a strategic plan that adapts to the changing tech environment. If we've learned anything in these last 2 years, is that everything is out the window and that tomorrow could be a completely new game plan. And I think financial institutions, to really be successful, need to embrace that sort of mentality and to get rid of some of the old roadblocks that have been keeping them from this, and really planning a strategic methodology going forward that would allow them to not be a large semi truck that takes really wide corners, but more of a fast, Ferrari type car that can change lanes and pivot and be ready to move. So I think there's a lot of exciting opportunity as FIs reinvent themselves.
Yeah, and you said two keywords there, Mary. The innovation and then the roadblocks. And when you're talking about where the new innovation comes from, it's from these new tech companies that are being started, from the new money being put in there. If you're waiting on your core to release these products, you can only be as innovative as your core. So are you going to put all your eggs in that basket to say, hey, we're just going to wait for our core to roll it out? Or are you going to be monitoring for the best new technology being developed in order to enhance your operations that way?
Good points. And so, that was my next segment, was talking about these roadblocks. Rich, you mentioned a great point about the core and the technology that's being utilized by banks. Obviously, to innovate and reinvent yourself, there are barriers to entry. So you talk a little bit more? Is technology the only barrier to entry into this space, or are there other things that bankers should consider when looking to innovate and get into the digitalization space?
Innovative IT infrastructure is going to be a big part of it, right? Like if you look at your core contracts, you're gonna notice that there is exclusive information in there regarding who you can actually work with. It's in your contract that you might not be able to integrate outside partners. So that could be a potential roadblock. If you find a new solution that you think is going to benefit your bank, and your core processor has something in their contract, or any provider has something in their contract that prohibits you from working with them or makes it very expensive for you to work with them, that's going to prevent you from being able to go down that road. And the same thing goes with accessing your data. You integrate with the core, they're your customers, core is tracking their account transactions, and then the core is maintaining their data. So you're going to need that data in order to give feeds to the different providers that you have. And the cores do a good job of actually restricting the use of that data. I think a lot of banks realized this when they were adopting the new credit loss standard. As they're going through that process, they thought they had better access to their data than they could. They couldn't actually get a feed from their core to their new accounting software because it was not allowed. It was not part of their existing contract. So I think those are two large roadblocks going forward, but there are definitely some others. Mary, did you have any?
Yeah, so I think your observation, being an outside entity that's going to be coming in, I think that there could be exclusions in the contract that Rich already touched on. Also, fintech companies want access to that data. A lot of the products that they're designing are established in order to integrate with that data, so that if you don't have either good data management programs in place, or as Rich suggested, some of the core have these prevention to access those data. It's really going to restrict your ability to get everything you want out of the fintech partnership. I think the other thing that's somewhat of a burden for financial institutions, or has definitely made them cautious about fintech partnerships in the past, is just the disparity between the regulations that are required between the two entities. Financial institutions is a highly regulated industry. So far, fintechs themselves haven't been regulated that stringently. Those who come to play in the FI space clearly have to know some of the regulations, but you're taking a little bit of a chance on those partnerships regarding if the fintech is really got the controls in place that it needs to. So I think the OCC in their most recent vendor management guidance really highlighted some things for banks to be thinking about regarding oversight of fintechs. And I think that's really important to make sure that you've got, there's the foundational elements regarding a SOC 1 or SOC 2, but just making sure that you're partnering with someone that understands it. I think the other major roadblocks is if you're not going this fintech route, that, not only the culture, which I've touched upon a little bit, making sure that everyone's really embracing this, that your board understands it, that there's an education at that level, but taking an assessment of the talent that you have in-house. Do you have someone to manage these responsibilities, this oversight? Do you have the talent that you can innovate yourselves? Do you have the bandwidth with everything else that's demanding your time to do this sort of work that you need to do to understand what's wrapped up in these core contracts, understand the access to data? And I know a lot of financial institutions are really at a point where, there's not spare time, there's not additional projects that can be taken up. And just like so many other things that you're trying to do, the foundational element of a digital transformation or embracing technology is really solid project management. And you need someone who can have a really good understanding of where you are and where you want to be in order for these items to be successful. You can't just wake up today and be like, I am ready and willing to digitally transform this bank. You have to make sure you understand where you're going and have a commitment from the various levels to where you want to be. And you need someone to guide that project and understand the vast elements. And I don't think it's reasonable anymore for one person to be able to do all those items. You need to have a team of people that understand the regulatory items, that understand the technology, and can guide you through that process. And that's difficult, especially with all these attractive fintech people coming up And I think they're taking talent away from the banks as it is, which is a struggling point.
Awesome. Awesome. So moving on to the next segment, change can be a really good thing, but it can also be a scary thing as well. And it's no shocker that the banking industry as a whole is actually holding up really well through the course of the pandemic, and things look really strong from, strong margins across the board, as well as, a credit to some prudent risk management tactics. So why should the banking industry consider the changes, and what are the benefits to these changes? And I'll pass it off to Mary to start things off.
Yeah, so it's always tempting, especially when you're in the middle of a good year, to say, hey, what we're doing is working. Why should we change what we're doing? And there's conversations I've had in my own life that says, just because you're happy now, you have to be looking out into the future, because if you're not laying the groundwork to be successful in the future, if you get sleepy, you're all of a sudden going to be in a position where you can be a first mover to being behind the pack. And I do think that, what I've read in the industry is that, 80% of banks is thinking about or already begun their digital transformation. But I don't know how forward thinking they've been to this date, and they really need to be thinking about the various elements. And Rich touched on this regarding, the data and how important that was to Cecil. The power of data is really going to be taking the driver's seat in this whole digital transformation. Data drives decision. Data is going to drive everything that we are planning to do. And just like there's been a massive explosion of data in the last 10 years, as all these additional digital channels open, that explosion is going to go exponential. And that leaves a lot of tempting opportunities on the table, where if people in financial institutions are thinking strategically and getting data management programs in place and opening these digital channels that will further provide information, they're going to be able to customize product offerings. They're going to really be able to embrace this banking as a service and this, I've heard it called an omni-channel experience, where, as Rich was alluding to, those people who want to come into the branch, the people who want to be on their laptops, the people who want to operate through their phones are going to have a unified experience through all these different methods. But in order to do that, they've really got to have the power of data underhand and having ownership of it, making sure that they move from the traditional cores or that cores adapt. I do think core companies are completely able to adapt themselves, so I don't want to pretend they're going to always be in the background. But if they move from a traditional core where data is really locked up to more of a API format where data is accessible and usable, that a lot of interesting things are going to come out of this, where they are able to offer this omni-channel experience, that they're able to customize product offering, that they're really able to be the banks they've always been, but in a more collaborative manner, in a more service first manner versus, hey, tell me what you want, being able to present people with really appealing options that they may not have understood. So I think some really exciting things are going to happen in the next 5 years of banking.
Yeah, I just think that customer acquisition is going to be changing over the next 10 years or so. Previously, people would be somewhat limited by the banks that were in their physical footprint, and that's just not the case anymore. And you're getting more and more competition from online only type banks like the Chimes of the world, who offer these zero fees, and they're very targeted with what they do, including like the SoFi, who go after that recent college grad and who's going to refinance their college debt with SoFi, and then they're going to sell them a deposit product. You're getting a lot more competition, and I just wonder what it does to new customers over the next 10 years. Mary made a point. It's hard to tell somebody they need to look at their new customers, their deposits, when deposits are at the highest level that they've been in all time, right? Like if you look at, I look at my banking clients and their deposits have never been higher. So how do we get up here and say you need to be looking at your deposits and your new accounts. It's like, no, that's crazy. Why would I ever worry about that? But it's about looking ahead and not just saying right now we're great, but how are we generating those new customers? Now, for something simple like a deposit account, you might lose some customers. They may not need to go to their hometown bank just to open a deposit account. But I think where you have some opportunity is with loan origination, right? That's a big transaction, and people like the comfort of having someone they can go and they can talk to. You're talking about the biggest transaction, first-time home buyer, the biggest transaction that anybody has ever done, and something they've never done before. So maybe that's your opportunity to get your new customers now. Maybe when they come in for the loan, maybe that's your opportunity to sell them the deposit product, or even if they get that car loan, or even if they want a credit card, maybe these are now your opportunities in order to get that customer. So, and I think that in order to do that, you need to have these superior products that aren't necessarily being developed by the big core providers. And so to limit yourself to only what they're offering, to me, seems risky.
Awesome. Thank you both. It all sounds very exciting and a bright future for the banking industry. Now, Mary, you had mentioned, 80% have started down this path or are thinking about, navigating their way down this path. What would you say to a banker that's part of that 20% that has not yet started? Where is the right starting place?
Yeah, so I'd certainly say this to the 20%. I would also challenge that 80% to make sure that they look at what they actually did, because that same article that quoted me, that 80% also did say, are you really looking forward? And I do think that the first step is really getting a clear current state assessment. Where are we right now? Where is our data housed? What restrictions are on us? And where do we want to go? And I think the where we want to go may have some learning to do at the institution, especially perhaps at the board. A lot of financial institutions historically have had older board members, and those board members may not be as comfortable with change. And also, I have to say that currently, I will say the regulators are trying to modernize things and get ready for it, but they are a tad behind. So some of the areas that might be part of this digital transformation don't have the clearest regulations of how to adapt standing lending regulations, know your customer regulations, and how to be ready in that space. So the first thing is making sure you understand where you're at and understanding where the risk appetite is, and trying really diligently to adapt that risk appetite to open as many paths forward for you. I don't think it'll be a one size fit all for these institutions. I think some will have the talent in-house and decide that they can modernize themselves and work with some of the core vendors and other things to update their infrastructures. Others are going to either look to partner or perhaps purchase a fintech company, and others may be more of a mix and match sort of scenario. And I think understanding where you are today and where you want to go is really going to help to make that roadmap, because these core contracts that you're in, if you do have restrictions, have a long timeline, but that doesn't mean there aren't things that you can be doing today to set yourself up for future success. And I think giving yourself a clear assessment of where you are will give you a clear map of where you can go and allow you to make the decisions that you can to not just catch up, but to lay the pathwork to have a bright future and an innovative future.
Yeah, great points, Mary. I'll have to make a note to get a blind on this window right next to my face, so half my face doesn't look like the sun for my next presentation. But that aside, yeah, so you're just going to go through your strategic planning, I would say, as you most likely normally are doing already. We had a CIO panel a few months ago, and they all said that they have a seat at that head table, because it's essential that as you're going through your strategic planning, you need to know how your IT infrastructure, how the access to the data that you have is going to either enable or prevent you from achieving those strategic goals. So you don't have to necessarily do anything separate, I would say, but it has to be included in there. And my understanding is that, yeah, there is a focus on this already going on at the strategic level. So it just needs to be included, and you need to say, does my core work with my strategy? Like, is my core going to hold me back, or is my core going to enable me to succeed?
It's really all about making sure you have the resources internally to do that assessment. And if you don't have the internal resources, reaching out to a partner that you trust in order to make sure you understand where you are so that you can get to where you're going. But I think the future is bright for financial institutions, and a lot of really amazing things are going to happen in the coming years.
Thank you to all the presenters and Drew for moderating such a fantastic conversation regarding the world of digital transformation. If you'd like to continue the conversation or learn more, please feel free to reach out to the presenters directly. Listed here, you'll see their contact information. Thanks so much for joining, and we hope you found this webinar to be informative.